Well, I guess it was bound to happen, but got the dreaded margin call. And I've gotten it before, and I took money out of another account, and I just couldn't do it no more. I decided to get out of some of my, not 100%, but I got out of my Roku short position. I just was killing me. It was killing the account. Other trades I was doing, that 50-some point move yesterday really screwed up my account, and wow. So let's look at the chart. All right, let's put it on the big screen. I appreciate everyone being here tonight, guys. You guys could give me a thumbs up, leave a comment below. It's funny because I get all kinds of comments. Oh, like, you shouldn't have done that. I'm always amazed by the people that think, honestly, if I thought it would have ran 154 points since I shorted it, I would have went long, or I would have bought calls. I mean, there's been a tremendous amount of money made on the long side, and I wasn't part of it. I got in shorting it. I did, and when I was shorting it, I was shorting like 10, 20 shares at a time. I think the most I did short at one time is 40. That was obviously a mistake, because that made my cost basis much lower, because I think that was the first time I shorted it, was in the 280 range. I thought it was going to, here's looking back at the chart again, and I've discussed this in the other video. I just ran far, and based on fundamentals and future earnings, I just look. And when you short a stock, especially a person like me who's a small investor, you're not shorting this to hang on to it for 2 years. You're basically looking, when you get a run. I mean, here's a perfect example. When you get a run, even here from 250 to 363, but $90. Now, we did get a little correction, but we only got 40 of it. And that's what's happening. We're getting these long ups and only little short corrections here. Yesterday, look at that candle. And I was hoping, and when I did cover it today, sad part is I covered it at 475, and it had a range of 449 to 478. But I saw it going up, and I'm like, oh no. This could be 495, 500 the way that it's running. And we have earnings next week. I said I have to reduce the position, because what happens is and I blame the brokers for part of this problem, is because, and I'm going to talk about that in the future, so people understand margin. Margin basically is buying anything on borrowed money. So if you, for example, was going to buy us $20,000 worth of stock, and the maintenance requirement is 30%, you only need $7,000 to buy that $20,000 worth of stock. You only need 30%. So that's all fine and dandy. If it's going up and you're paying, let's say 7-8%, if you're getting 30-40% moves, and you're still, even after a 7% margin, you're still ahead, because hypothetically, if you held that kind of position all year, or that dollar amount, you're using leverage, you would make 30% and only pay, you're still ahead 23%. But when you take that $20,000, it's good when it doubles to $40,000. Now, what some people will do is now all of a sudden their account goes up $20,000 in value, and you're able to leverage that gain without selling the stock to either buy more stock or buy other stock. So now all of a sudden you, let's say, gain $20,000 like that, which is a double, 100%, and this stock has moved 100%. That allows you in a regular stock to control now $60,000. So you could see where it can get dangerous even as it goes up, because then all of a sudden when it corrects one day and it drops down, you could be holding, for example, you could be holding $100,000 worth of stock, and you only need $30,000 to control $100,000. And let's say you have a 20% correction, it goes down to $80,000. Well, you had $30,000, and now, your number drops because you're using borrowed money, and the broker is never going to lose. You're going to lose. So it can really work against you when you get underwater. And that's really what happened to me, is because what happens is when I sell the stock short at on average about 321 was what I sold it short for. I sold, the money got put in my account and it sits there. And then the hope is I buy it back. I buy it back for 280. I make 40 points. At 50 shares, that's $2,000. It's not bad. But now all of a sudden, when you're talking now $475 is what I bought it at, that's $154. You get yourself 50, 70 shares, you're talking $8,000 to $10,000 there. Now it costs you more to pay the loan back, or pay the borrowed stock back. And that's the problem with selling short. It can really squeeze. And then what happens is you either have to put more money in to justify the position and keep it at a certain percentage, or you have to, a lot of people, even that's where you see sometimes good other stocks. When we just recently had the squeeze on GameStop and AMC, you saw some good stocks were dropping because people were having to raise money and they were forced to sell other positions. And that was happening to me too. And then you see them, it sucks when you sell a stock at 50 and a week later it goes to 60, and had you held it, and you can't hold it. So selling short is really, can be dangerous because it could be unlimited losses. When you buy a stock for $10 and you buy 10 shares, the worst is you lose $100. Well, if you sell short a stock for $10, for every dollar at 100 shares, for every dollar it goes up, that's $100 that you're now more on the hook for. So ultimately, I made the decision to, I still have some shares short, and I did buy a put position for next month because honestly, I got to recoup this money. I cannot sit here and cry the blues. A lot of people, you don't share your losses. I see that on guys I follow on YouTube, guys I follow on Twitter. And this is a hard pill to swallow, but I have to be blunt about it and honest with myself that I made, when it had dropped back down to here, I thought, wow, I was only basically at that time I was only like $2,000 down, and then when it started rising up again, I shorted again, so I had brought because my average. Here's what the issue was. My average short position was 280. So when it dropped back down, from 280 to 447, and it dropped back down to 380, I basically still had 100-point loss, which was about $3,000. So, and then all of a sudden it starts going up. I started shorting more and brought my cost basis up to like 321. And I was only shorting like 10 shares at a time and got out of it, but ultimately, at one time I was 8,000. I think I'm really looking at close to even with a couple puts that I bought on Roku, that I'm looking at close to $11,000 loss between Roku puts in the last 2 months, because there was a couple times like when it dropped down in here, I thought, okay, we're good, but they're expensive, because as the stock moved, the price of the puts went up, so I didn't get a big enough move to justify and do that. So I honestly feel I had too much in the position on a short position, and to give myself a better opportunity to make money back and trade more in the market, I want to free up some of that cash and really get out of some of it, so that I can start trying to make, instead of being all on Roku, I could maybe be in 4 or 5 different positions, give me just a better chance to make it back. What I'm probably going to do in the future is, when we get big like this, I'll probably, if we get 30, 40 moves, that's days I'll probably short it, and I'll hope to make, $300 or $400. It's going to be tough. It might take me all year, honestly, to make that back just in Roku. I hope I made it. You're going to see I have the $1,500 challenge coming out, and I did make some money on that. But, again, and that's what I was talking about. Part of the problem is you're at the mercy of the broker too, because here's what happens. You that hypothetical 20,000, I said at 30% was 7,000, but now all of a sudden, because of the volatility of the stock, they raise it to 50%. Now all of a sudden you need 10,000 to control the same amount. But as the stock keeps going up, your loss gets bigger, so you have less and less of your own money. There's where the margin call comes in, or you're forced to sell other stocks. I know people watching, you shouldn't have shorted Roku. Well, yeah, of course. I look, I believe I have Roku on TVs and stuff like that, but how much of a crazy run, 250 to, it's 100% run since November 16th, pretty much. 100% run. That's just amazing. You're talking about a $30 billion market cap in November to a $60 billion market cap, and the company doesn't make no money. And at the end of the day, it's easier to get into doing this than not. So that's the situation. I'm hoping next week earnings come out. Let me double check. Yeah, February 18th. Look at the trends though. Short-term price, investors. And that's the reason I got out, because we're getting at a point that this thing could go to 510 like that, and I didn't want to be faced with another $5,000 loss and get to a point where I'm down 60% on the account. It just was getting to be too much, and I decided. So I appreciate you guys' support. I appreciate you guys watching me. If you guys could give me thumbs up, I'm gonna usually do videos every day. I did start the $1,500 stock option challenge this week. I will post it on the weekend to show you how I did during the week. Please keep in mind, I am not a licensed broker. I do this for education and entertainment. Yes, I am making real trades and showing you these trades, and trust me, it hurts on this position. And I'm sure I'm not the only one that has gotten caught up into it. So I plan to do a video every day on this channel, Money Me, where we talk about all things money. So do me a favor. Will you money me and subscribe to the channel? Thanks. Have a great night.